Now, you call them myths, I call them untrue stories or secrets. Now, we're continuing from where Badi and I left off last time. Now, before we go into that, let's talk about what the markets, the general markets have been like this week from currencies, especially the equities. We're still where we are. Greece is still on the table.
Sure,
we had the testimony from Mr. Ben Bernanke yesterday, but primarily the focus continues to remain on Greece, and it seems like it will continue to remain on Greece until they have that deal.
Yeah, the attention is on Greece, but still yet there is still weakness in the US dollar, in the greenback right now. The US dollar has been losing since like middle of last month.
Why? It's meant to be, isn't it meant to be a safe haven for investors away from the euro?
It's supposed to be a safe haven, but right now it's like investors are beginning to overlook the Greece issue, and there's been a lot of strengthening in the eurozone. You know, it's not just strength in the eurozone. There's been a general weakness of the US dollar because the last data that was released on housing sale in the US wasn't really good, and so
that overshadowed the jobs data.
The jobs data overshadowed the law because there's quite housing in the US is a big deal.
Yeah.
You know, so and since there's a negative report on the housing data, then the US dollar has still been doing badly for like a month now.
So are you saying or suggesting that the euro has actually been strengthening?
You see, because you have to look at it relatively. It's not like the euro is strengthening, but if the dollar is weaker.
Okay, if the dollar is weaker, where in terms of currencies, where investors putting their money in? What other currencies?
The investors are putting their money in other currencies, and that also includes the euro. Like if you check the movement of the pound for about a month now, it's been on a very powerful uptrend. A lot of times you have the pound pulling back, but this time around there has no pullback. You know.
Well, I can understand the pound, but I'm talking about the euro.
Yeah,
here.
but they all drive themselves. If there's weakness in the dollar, for instance, it has an all-round effect in other currencies. So you have, when dollar is weak, that weakness goes around a lot of other currencies. And so that's why it's giving like a partial strength to the euro. It's not like the euro is all that strong, but because of the strength of the pound, the strength of the Swiss franc, it's also giving strength to the strength of the euros, sort of. So it's not as if the euro is very strong, but actually the dollar is not strong too. So we have the euro winning the dollar right now.
Okay, so let's say since Monday, how much bashing has the euro, or how has the euro fared since Monday?
Since Monday, the euro has been on uptrend.
Oh, that's very interesting and very surprising also.
Because I have to look at against the US dollars.
What particular currency? Okay.
Yeah, against the US dollars. Yeah.
Wow, interesting. Okay, let's go into the myths that we have for today. And now, one of them is the fact that if you're a successful equities trader or stock trader, that automatically means that you will be successful, or a successful currencies trader. I mean, you would have developed or gained some experience or skills trading equities, so can that be transferred into the Forex market?
Partially it can be transferred. You know, I meet people at times who will tell you, you know, I've been to the US, I've studied this, I've studied that, you know, I've been in the equities market for this long, and so I want to start trading currencies. And what the deep mindset they have is that automatically they just become successful. And they don't understand that the volatility in this market, too many times, is different from other markets. And that volatility you need to get used to. So many times stocks cannot move up to maybe 100 points a day.
But does it give the stock trader, this particular trader, some leverage at least?
Yeah, even sure. It gives them a level of leverage because they already have a mindset of what trading is about.
Okay.
Then we'll also look at it in the Nigerian mindset. Also, it's different when you look at it from international mindset.
Okay.
Technical analysis, for instance, does not work in Nigerian stock market. You can't go and say, okay, what's been the moving average of maybe a certain stock?
A particular food stock, for instance.
It doesn't really work. Because technical analysis works because a lot of people use it. So if I'm using moving average, you're using moving average, everybody is using moving average on a particular stock, we see that stock respond to that moving average movement because we are using it. So people bring that mindset sometimes. People who've been trading maybe stocks in Nigeria, they bring that mindset to the Forex, and it's totally different. If you're an international trader who trades stocks abroad, where people do a lot of this analysis, then you have a better, understanding of those markets, relative. But if you're somebody who's trading stocks at a very local level, all you do is that you have a mindset of what trading is about, but you don't understand truly what it means to trade currencies. Where you have more volatility, you have more market movements, that you have access to leverage, several factors that could negate, those your experiences if you bring them as it is, 100% into trading currencies. Okay,
so what is that one cardinal rule you would tell a trader who has that particular mindset that, okay, I'm coming from the currencies market, I could just do great at the currencies market?
Well, basically, I just recommend you start on practice. Get a feel. It's like maybe you used to drive in. Let me use
maybe an manual car.
Manual car. Then you now go automated. Oh, you used to drive in a Volks. I'm talking not the new one, the old Volks, not the old Volkswagen. Okay. And then I give you an E-class. For the old Volkswagen, you need to only take a curve. You need to, plan
really
your curve
your
properly. But if you want to take a curve with the best, so it just needs getting used to. It's not like it's not like day and night. The difference is not that high. But basically, what I'm saying is that you need to get used to the market you are in and gather a lot of experience in that market before you can really start trading, real capital with it.
Are there one or two principles he can apply from being a currencies trader that could help him?
Sure. One of the great assets of being a trader is the mindset.
Okay.
The fact that people who do business, for instance, if you're used to selling, let's say electronics, most of the time you don't lose. Because when you buy a certain TV, you sure you want to sell it at maybe 1,000 naira profit thereabout. But when you bring that mindset into trading, especially online trading and all that, loss is part of it. And for somebody who's in trading stocks, he understands that mindset. So you can bring that mindset also into trading because you have to calculate your losses when you trade it. You have to actually assume the risk anytime you're taking a trade. But when you're doing some other business, you don't assume any risk. You just assume everything's going to go perfectly.
So have you had an encounter with such traders, perhaps some of them who come to Alpari and they come and they tell you, okay, I'm coming from the equities market, I've done this, I've looked at my portfolio, look at my track record, just put me there.
Well, we'll see one or two, and eventually when they get their fingers burnt, they now settle down and like, okay, this could be a different game, so let me settle down and learn the ropes here.
Okay. Well, I'm sure you did help them and put them
through.
Sure.
That's what we're here for.
Okay. All right, let's go on now. Another myth is the fact that you need to actually watch the market or monitor the market 24 hours a day. Now, I hesitated on this particular one because I actually do know somebody who trades Forex, and he seems to be, I think I can use the word stalking the market 24 hours a day. Well,
some people are that. It could be addictive, if you're making profit. It could be addictive because you just want to be there 24 hours watching the market. But the truth of the matter is that you don't have to sit down watching the market 24 hours a day. You can actually be as busy as anybody and still trade the Forex, especially with the current technology that we have these days. On the move, you analyze the market, but it doesn't mean you have to be there all the time. You just have to know what the market is going to do. In your mind, for instance, there's an expectation you have of what market should do this morning. You go place your trade before the market does it. Then you go and do your other businesses. By the time you maybe 3-4 hours later, you log in, and that is if you have the time in those 3-4 hours. The other beauty of it is that, when you're trading, it's not like you have to be there to open the trade and close the trade and monitor. There are a lot of softwares these days that help you to do things like that. Not even that you have to install those softwares. They come with a trading platform. Okay. Typical example.
That's for the trader who's trading for himself.
Yeah. Typical example, you place a buy trade, for instance. Okay. You have what we call a stop loss. You have what we call a take profit. So let's assume you're expecting that, okay, this currency is going to go 100 points today. You put your 100 point take profit. You don't have to sit there and watch it get to the 100 points. Now, if you are jobless, if there's nothing else you're doing, I don't want to use the word jobless because trading is actually a job. But what I mean is that if you have no other responsibility you're taking, so all you're doing is trading the currencies market, then you can sit down and watch it. Even when that's the only thing you do. So many times it's still okay. So you have maybe a TV screen by your side, you're watching a movie, because you have to sit down and watch the market go to that point. Okay, Michael,
I wanted us to actually paint a typical scenario right from when a typical trader wakes up, maybe from 7 or 6 a.m. in the morning, but we'll do that when we come back after the break. I have been talking to Michael Akinwale. He's a currency analyst from Alpari, and we're looking at some of the myths at the currencies market, some myths that investors or currencies traders pass around the market as to how one can be very successful trading currencies. We'll take another quick break. Join us again.
There's a new way to now invest that allows you to diversify your portfolio.
It's Forex, the global market for foreign currency trading. A market in which the world's leading currencies are traded 24 hours a day and 5 days a week.
Now, to take your Forex trading strategy beyond borders, Alpari is the platform of choice,
in which you can trade Forex with professional guidance until you become a seasoned trader.
Alpari also provides free training seminars for both beginning and seasoned Forex traders 4 times a week, explaining complicated things in a simple way to make Forex trading comprehensible to everyone.
Call us today on 01-821-8274 or 080-3457-3593 or email us at nigeria@alpari.org or visit www.alpari-forex.com and experience dependability and innovation in online Forex trading.
Welcome back. We're still